Imagine waking up one morning and seeing headlines screaming that USA, Iran tensions are escalating, oil prices are spiking, stock markets are swinging violently, banks are tightening lending. The US dollar shows unusual volatility. Your investments, stock portfolio, retirement fund, and daily expenses are at immediate risk. Brent crude surges past $100 per barrel overnight. Gasoline prices jump immediately. Airlines face soaring fuel costs. Shipping for groceries, electronics, and vehicles becomes more expensive. Energy companies gain, but ordinary Americans feel the financial pinch immediately. Inflation rises. Household budgets shrink. Retirement contributions and savings plans are impacted. Families worry about basic living costs. Discretionary spending is cut. Investments are delayed. Stock markets swing violently. Energy stocks rise, but airlines, travel companies, and consumer discretionary sectors fall sharply. High-yield investments, ETFs, mutual funds, and retirement portfolios fluctuate rapidly. Small investors panic sell. Institutional investors hedge aggressively. Capital rotates towards safer sectors, including energy, utilities, and gold. Fear drives markets faster than fundamentals. Portfolio diversification and risk management are essential. The US dollar shows mixed signals. Investors flock to it for safety, but rising inflation and energy costs challenge its stability. Borrowing costs increase. Mortgages, personal loans, and credit card interest climb. Cash flow management becomes critical. High-yield investment strategies, retirement planning, and emergency funds are affected. Banks tighten lending standards. Loan approvals slow. Small businesses face higher borrowing costs. Consumers experience more expensive credit. Business expansion is delayed. Consumer spending drops. Portfolio returns and stock market liquidity are affected. Inflation rises due to energy costs and supply chain disruptions. Transportation and production expenses increase. Grocery bills, gas, and utilities climb. Disposable income shrinks. Families adjust spending. Market volatility affects investment returns and long-term financial planning. Global markets react quickly. European and Asian investors move funds to safe assets such as gold, bonds, and high-yield savings accounts. Emerging market currencies weaken. Trade slows. Global economic growth is under pressure. Businesses delay investments. Consumers feel rising prices and financial uncertainty. Consumers face rising gas and food prices. Loan and credit card interest rates climb. Disposable income drops. Families reduce spending. Lower consumer spending slows economic growth. Household budgets and retirement planning are affected. Investors rotate capital toward energy and defensive sectors. Other sectors lose investment. Volatility signals risk, not necessarily collapse. Monitoring high-yield investments, ETFs, stock portfolios, and inflation-hedged assets is essential. Awareness of oil prices, dollar trends, and banking behavior is crucial. Key indicators to watch include oil prices, US dollar trends, inflation reports, bank lending patterns, and global stock market volatility. Tracking these metrics allows investors to adjust strategies, diversify portfolios, and manage cash flow effectively. USA, Iran tension affects every layer of the economy. Energy markets, stock indices, banking liquidity, and currency strength face volatility. Inflation rises. Interest rates respond slowly, but consumer prices climb faster. Household budgets are impacted immediately. Retirement funds and high-yield investments are at risk. Market swings create uncertainty for ETFs and mutual funds. Portfolio diversification is necessary. High-yield returns depend on timing, strategy, and awareness of geopolitical developments. Small businesses are squeezed. Credit tightening makes expansion harder. Operating costs rise with higher energy prices. Inventory and shipping costs climb. Employees may face reduced hours or pay freezes. Consumer spending slows. Lower spending slows growth. Awareness of banking trends and economic policies is essential. Global trade slows as tensions persist. Supply chains are disrupted. Exports and imports face delays and higher costs. Even distant events affect prices and availability of goods in America. Investors, business owners, and consumers must act strategically. Consumers must manage household budgets carefully. Track energy costs, groceries, and utility expenses. Review credit usage and interest rates. Focus on emergency funds, retirement planning, and cash flow management. Every financial decision carries higher stakes. Investors should monitor market indicators constantly. Adjust portfolios to reduce exposure to high-risk sectors. Rotate capital toward energy, utilities, gold, and inflation-protected assets. Use ETFs and mutual funds wisely. Risk management is critical. Banks, markets, and currency movements are interconnected. Rising energy costs increase inflation. Interest rates rise. Loan approvals tighten. Small businesses face higher costs. Consumer confidence declines. Portfolio returns fluctuate. Investors must monitor every economic indicator to act proactively. Awareness, planning, and strategy protect your wealth. Portfolio diversification. High-yield investment strategies, cash flow management, and retirement planning require constant attention. Every financial decision matters more than ever. Fear exists, but preparation and strategy reduce risk. USA, Iran tension is a financial story, not just political. Oil, stock markets, banks, the dollar, and inflation are all affected. Households, investors, and businesses must respond strategically, monitoring key financial indicators. Adjusting investment strategies and managing risk are essential. Every decision matters. Awareness protects wealth. Action mitigates risk. High-yield investments, ETFs, mutual funds, and retirement portfolios require close attention. Capital rotation, sector shifts, and risk mitigation are ongoing. Awareness of safe haven assets such as gold, government bonds, and inflation-protected securities is crucial. Consumers must manage household budgets carefully, accounting for rising gas, food, and utility costs. Banks are cautious. Lending standards tighten. Credit becomes more expensive. Consumers face higher loan costs. Small businesses struggle to secure financing. Cash flow is strained. Portfolio returns are affected. Awareness of economic trends and financial policies is essential. The US dollar faces pressures. Inflation reduces purchasing power. Energy costs contribute to the strain. Borrowing costs rise. Mortgage payments increase. Credit card interest climbs. Cash flow management is critical. High-yield strategies, retirement planning, and emergency funds require reevaluation. Every economic sector feels the impact. Energy, transportation, consumer goods, banking, and finance adjust to uncertainty. Stock markets swing with every headline. Investors rotate capital rapidly. Fear drives decisions faster than fundamentals. Awareness, caution, and strategy become essential. USA, Iran tension is financial, not just political. Oil, stock markets, banks, the dollar, and inflation are affected. Households, investors, and businesses experience consequences daily. Monitoring key indicators, adjusting strategies, and managing risk are essential. Awareness allows individuals and businesses to act decisively. Portfolio diversification, high-yield investment strategies, cash flow management, and retirement planning require constant attention. Every financial decision, from spending to investing, matters more than ever. Fear exists, but preparation and strategy reduce risk. Understanding market dynamics safeguards personal and professional finances.